Bag.tv. Hope you're having a good one. What's good? What's good? What's good? So, this morning I wake up, it's Friday, and I go, today could be a good day. And then I recall that today is a big economic information day. And it's Friday, so what is Friday? Friday is normally a big sell off day. So, am I expecting to take a hit all over the place? That answer would be yes. Am I expecting the markets to go up anytime soon? That answer would be no. Am I expecting any kind of data to come out today that would signal that the Fed would lower rates? No. Those rates are not going to be lowered, at least until Kevin Warsh takes the seat, or the next chairman, if that winds up being Kevin Warsh, takes the seat. I don't think we're going to see those rate cuts anytime soon. You can forget about that. You can forget about that. Just wipe that out your head. It doesn't even make sense when you stop and think about it. It doesn't mean that they won't get lowered later in the year, but there's absolutely no data that backs that up. None. There are too many things fighting against it. And I think that's one of the reasons why you've heard the rhetoric around that just die off. Because the more rhetoric there was, the more stupid they sounded. Yep. Just saying. So a once high flyer Blue Owl shares fell 6% after restricting withdrawals from a retail debt fund following a sale of $1.4 billion in loan assets, raising liquidity concerns in the $3 trillion private credit market. Now, remember I kept saying there's a big difference between money or fiat and credit? If credit is this big, money's only this big. That's what I'm saying. And Blue Owl Capital plays a big role in that space. Now, the COO or the CEO, one of the C-suite people is going to be on CNBC this morning, I think at 9 a.m. I will be watching that. I will be having that on the television. Why? Because I think it's important to hear what they have to say. Because they're saying, "Oh no, we didn't stop withdrawals." A lot of people are thinking this could be a canary in the coal mine. So if your economy is doing so well, see what I mean? This is where I'm going with everything. Yo, my man Rick Ritchie in his house. You're working on investing in yourself right now. That's what I'm talking about. Gotta love it. Gotta love it. So when I look at Blue Owl Capital, I look at that private credit market, I'm kind of sitting back and I'm going, there's a storm brewing. There's a storm brewing. I think there are a couple of storms brewing. Couple good, couple bad, but I think there are a couple of storms brewing, and I think the credit market is one of them. And that could wind up being bad. Tom Lee predicted an S&P rally toward 7,300, highlighting tech stock rotation, software sector bottoming, and crypto assets. Tom Lee does not look at tomorrow. He looks at things way down the road. And I kind of like how he thinks. I don't always agree with him, but I kind of like how he thinks, because he always has a real reason as the basis of his thoughts. He's not talking about, well, I'm going to give you my thoughts based on some fluff. No, he's giving you his thoughts based on what he believes to be reality. Just like how the man thinks. The Clarity Act stalled in the Senate. Shocker there. But there are a lot of people saying the reason why it's stalling is because of this regime's deep dealings in the crypto space. And that's what they're saying the holdup is. And that's, I gotta say, yeah, it kind of makes sense. Because there will be no rule that says that the regime can't make money. I mean, already the regime's trying to steal another $10 billion to go after their peace council or something like that. And it's like, no, because Congress decides how money is going to be spent. So you're not just going to take $10 billion out of the Treasury and then you're going to be the only person that's in control of this little slush fund. Yeah, nah. That's working against your country. And technically, I think that's actually treason. Just saying. Just saying, there comes a point where always testing the limits. And that would have a huge economic hit. Again, I still ask, how are our soybean farmers doing? Because the season started, right? They had to start planting. They had to do a whole bunch of stuff to see what's going to happen this year. And I don't think China's budged. And we still gave $40 billion to their number one competitor because their number one competitor is now the leader in the market space, right? What are we doing for cattle farmers? I don't know. Economically, we seem to want to save those that don't need. And that's a problem for the United States. Can't keep running around saving the world, giving money out, especially since we don't have money to give. I mean, seriously? So yeah, there are a lot of things that I'm looking at that level. That's a problem. But looking at that Clarity Act and the mud that's got to be kind of figured out. It's like literally you're taking mud and you're trying to separate out the water from the dirt. And that's hard work. It's very hard work. And then, of course, you have the banks that are saying, we don't want them to be able to have staking. Gee, I wonder why. A report is out already that, regional banks, community banks are losing money to companies like Coinbase. Makes sense, right? I can go create more value by keeping my value over there than keeping it over here. That's not them stealing from you. That's you not stepping up your game. I keep telling you, I've been saying it for years. Banks have to redefine what it is that they offer people. It's a big deal. Cordell, what's good? Don't forget to invest in yourself today. How are we going to get rich this year? I don't focus on getting rich. I focus on eating and how well I can eat. Know what I mean? So I start to think about, you want to be driving a Lamborghini. You don't want a Lamborghini. Trust me when I say you don't want a Lamborghini. Look under the hood. You don't want a Lamborghini. Look under the hood. That Lamborghini truck, take a look under the hood. Take a look under the hood and tell me what engine that is. You don't want that. A cute body. A name that you like. Stuff is not the answer. I'm not living for stuff. I'm living for experience. I could rent a Lamborghini for a weekend and get the experience of driving a Lamborghini. All the looks, all the woos. That dies out real fast. I want the experience. I want to be able to travel the world. I want to be able to take pictures. I want to be able to do things. And I don't mean as a tourist. I mean when I go someplace to be there for a minute and actually experience that place. Big difference. Big difference. Do I want to see the Louvre? Maybe. I have crazy, museums here in New York. I love museums, but I want to see the people. I want to see how they live, how they think. That's what I want to experience. I want experiences. I tell my kids to go get experiences. And admittedly, my kids have had more experiences than me. That's a good job. It is your job to give your kids more. So when I'm looking at all this research and I'm sitting back and I'm going, yeah, there's a problem with the Clarity Act. Yeah, I'm looking at what the problem with the Clarity Act. You have two major problems. That act has to be written in such a way that will not impede this regime from raking in more money. And it has to be written in a way to appease the banks because they don't want to see anybody taking their business away from them because they're too freaking lazy to actually step up. Think about that. You walk into a bank and you just look around and you just kind of go, is anybody here smart? Is anybody here doing what they need to do? There are gaps. There are huge gaps between the levels of management in banks. Thank you for letting me know what the show is fire. I don't give out crypto advice. I give out thinking advice, how to think, different ways on how to approach different situations. And usually I give a rundown on the ones I'm looking at. I do that practically every morning. Like which ones, when we go over the numbers, I say which ones I kind of have my eye on. But direct, you should invest in this. I'm not a financial planner. I don't give financial advice. That'd be illegal. I don't do illegal stuff. I'm too pretty for jail. Just saying. Just saying. What else do we have going on? Wells Fargo revised Fed rate cut expectations, citing strong labor data and cooling inflation. The next cut would likely be delayed until June. Yeah, been saying it for a while. I don't even agree with June. I don't even agree with June. Just saying. I'm paying a lot closer attention to this, and we should see some things around what's going on today. Oh yeah, everybody wants to talk about Canton. I don't have any thoughts on Canton. I don't follow it. I don't. Like I said, I don't give advice on that kind of stuff. I do when I have research, and I have not researched. Okay, I watched Canton shoot up. I have zero research on Canton. Zero. I wouldn't even be able to tell you what market space they're in. I can only say, yeah, I've watched them shoot up and get higher in the, higher rankings. That's it. I have nothing positive to say, nothing negative to say. Haven't seen it. And I don't know that I have the time. Maybe it's now time. Rick Ritchie knows about this, but I have slots for everything, right? And right now I don't have any open slots. Meaning I don't have any slots where I can fit in another asset that I want to track, that I want to invest in. I don't have any open slots. Right? So that means I won't do any research unless I have a slot that's going to open. Right? That's how I look at it. I don't even think about it. It doesn't mean that I don't listen to other people and go, oh, that could be interesting. But that means I also don't have time. I do not have time. We're too busy putting out, Grow My Bag, and we've got a whole social media platform. We have a whole social, I would say ecosystem when it comes to, getting the news out. I don't have time to look up Canton. It doesn't interest me. Like, I haven't heard anything about Canton that makes me go, oh, okay, that's interesting. Haven't heard anything like that. And that's usually what triggers my research is there's a use case that interests me, and I think there's growth in that use case. You know what I mean? More news, because we're going to have to get to the numbers in a little bit, and I'm probably going to rifle through this stuff. So, tech investor Jason Calacanis pays $300 a day for an AI agent. And I was watching him and Chamath go through this conversation, and they were like, yeah, it costs too much to run this stuff. Like, nobody's thinking that, oh, I'm going to turn on OpenClaw and it's going to do everything I want to do. They forget that you've got to pay for all of those services. Holy moly. And he's like, $300 a day? He was like, that's $100,000 a year per agent. And that's on the nice side. They don't sleep. You know what I mean? They don't eat either, but that's $100,000 a year per agent. 10 agents, well, that's $1 million. I listen to all these people that are like, oh, I'm a founder, I'm a builder, I'm using this agent to do some stuff and blah, blah, blah. Are you really a founder? Are you really a builder? Did you really build something? I don't know. It's like having a robot in the house saying, oh, I own a cleaning company, and all you did was teach your robot how to fold clothes. Seriously. Did you have an idea, a thought in your head that was of your own, and then you went out and found tools to go build it? Cool, you found tools to go build it. But did you really build something? Did you really do something? But the cost behind it all, because I'm going to explain something to you guys, and I've done this before, and I'll probably do it again. So you create an agent, or you want to create an agent, and the agent has a task. The agent has to burn tokens, money, to actually go out there and perform a task. They perform the task. Did they do it right the first time? Probably not. They probably had to revisit a few times, which means you're going like this with your tokens every single time it wants to execute, because it may or may not have executed properly the first time. And that's how you're spending big money. And that $300 a day, I can tell you now, there are people that are spending way more than that. And so you sit there and you kind of go, yeah, that whole gonna steal your job, that might be overblown. That's why I said, stop looking at it as going to steal jobs. Start looking at that technology as it's going to steal tasks. It's going to steal tasks. So yesterday we had a solution that we needed to get out of the door, an AI based solution we needed to get out of the door because it's gonna help us big time. It's literally taking tasks off our desks so that we can do other stuff. You want to know who helped me build it? It was me and one of my developers, my lead developer, as a matter of fact, my architect. When I have an idea, he's the first call I make. And we sat there and we were like, oh man, we can make this work. And they got intricate and it took us hours. Two hours to get it done. 2 hours to get this done. We got it done, still needs tweaks. And then I woke up this morning and I was like, man, we definitely did that the hard way. We should do this and then do that. Problem solved. But we wouldn't have thought about that had we not actually said, okay, this is how we're going to do things. This is why we're going to do things. We got that first idea out the door. And had we done that using publicly available technologies, it probably would have cost us about 10 grand or something like that. I mean, because we were constantly testing. That's a burn. That's a burn of tokens on a daily basis. But we have our own in-house implementation of AI. We've got like 10 nodes running around. So we don't have to pay for jack. Big difference. My team knows their jobs are in no way at risk. The first tools we think about, how can we take tasks off their desks? Because I need them doing other stuff. And I kept saying, this is how companies mess up. They're thinking about firing people. How can I implement this tech so we can fire people? It's the wrong way to go about it. I don't want to fire anybody. Are you kidding me? I've got a kick-ass team. They're not going anywhere. We've got a deal. I don't fire you. You don't quit. Simple as that. I still make videos for my kids. These are all for my kids. I love doing it, but it's all for my kids. That's how I got started. What's the easiest way of making money using AI? Do your own research. Know your entries and exits, and absolutely invest deliberately. Your first investment is where? In yourself. NVIDIA finalized a $30 billion equity investment in OpenAI, valuing it at $830 billion. $30 billion. Remember when they were talking about, oh, it's going to be $100 billion? And then NVIDIA was like, we didn't say that. You asked for it. Yo, we didn't say that. He was like, nah, son. No. That's not what we're doing. So they made a $30 billion investment, which is still a hefty investment. That's a hefty investment. But back to AI, I think AI's got a problem. I think AI's got a problem with companies like mine that are implementing their own solutions, don't have to spend any money going out of house to solve any problem. We have our own implementation. Boom. And we keep it. We keep it cutting edge. I think we're about to upgrade this week. I have to look again. There are a couple of places where we can upgrade, and we're thinking about upgrading. But that saves us time. The task that the tool that we built yesterday, because Buddy Boy had a whim, that tool that we built yesterday is going to save me personally, about an hour a day. About an hour a day. I built a tool myself a couple of weeks ago that saves me about a half hour a day. So imagine, in the past 2 weeks, I've been able to leverage AI and automation to save me 1.5 hours per day. 7.5 hours per week. What would you do? That's a day off. Like I know what that looks like. That's a day off. This is how we measure success. This is how we do it. And I look at people and I just go, you're funny. You want to implement technology, and your first thought, look at big business. Their first thought was, we're going to fire people. Yay. Not we're going to save time. We're going to save money. We're going to be able to help our clients. We're going to be able to fire people. Yay. You freaking kidding me? Bunch of clowns. The only person besides myself, and I'm not saying that we don't exist, but the only other person I heard say it out loud, that thought process out loud, or my thought process out loud, was Solomon from Goldman Sachs. He said, we're implementing technology that is going to increase our capacity. Some people may be displaced, but our first thought is to increase our capacity. So imagine we have more capacity to do more, to make more value. That was his first thought. To increase capacity, to create more value. It wasn't to fire his people. Goldman Sachs already has, a lot of firms already have a process by which they shave off X percent of their people as, low flyers. They cull the herd every year. But his first thought was, no, we're doing this so we can increase capacity. Everybody else out there is like, oh, we're going to be able to get rid of all the project managers. And then you'll call them back in a couple of weeks because you realize you screwed up. You're going to be like IBM that realized that, holy moly, we're not hiring people at the low end. That's going to create a gap as the company moves on. A gap in management, leadership, thought leaders, all that. It's going to create a gap. And we're not there. Ooh, maybe we should rethink this. And that's what they're doing. They're rethinking it. And I'm like, yeah, exactly. Get it right. You can't be that stupid. But some of these companies really are that stupid. If you're a company that's thinking that whose first thought is, I'm going to save my people time and energy doing dumb stuff or doing lower level stuff or doing any stuff, maybe it's high value stuff. But if I can automate that process, if I can leverage AI to get that done, and I'm going to give them back each an hour a day, we're going to build that. And think about it. I'm going to save an hour a day. I'm already saving an hour a day. Even though it's not perfected, I'm still saving an hour a day every day. I saved an hour yesterday. I saved an hour today. That's 2 hours. It'll pay itself back. It'll pay itself off in a week. Because that's how, actually, if you think about it, there's two of us. So 5 hours each, 10 hours. So a week and a half of it running, I will have made my money back. Mind you, that tool and what we're doing could also save other people time. Wow. That's how we calculate how things work. Just saying. Let's see. Tokenized world assets grew 8.68% to $24.84 billion in July 2026 or 2025, while DeFi's TVL dropped 25% to 94.84. I think it's $95 billion right now as I look. Japan's not doing well. Their budget totals about 122.3 trillion yen with a 29.6 trillion deficit. Yen deficit. The United States has you'd have to do the math on yen to dollar. We have a 38 point something trillion dollar deficit. The world runs on credit. Deficit means somebody's giving us credit. A whole bunch of people are giving us credit. So the math on the dollar downfall is pretty stupid math. And I don't think, like I said, I've been saying for a while, I don't think it's BRICS that wins. I don't think it's BRICS that wins. I think BRICS is just a red herring. Pay attention, folks. Do your own research. Know your entries and exits and absolutely invest deliberately. That's the idea. That's the idea. Pay attention. There are a lot of numbers out there. BitDeer technology shares dropped 17.38% after a $300 million convertible note offering. Yeah. They're like, oh, yeah, we're a miner. We need to raise some money. And now people are mad because we said we needed to raise some money. I have an issue with how Wall Street works in general. We're going to guess at what this company should be making, and if they say they're making less or making more, we're gonna hammer them or reward them. They don't live in that company. They don't know what that company has to deal with on a day-to-day basis. I don't know. There are not. There are a lot of things that are different about going IPO. Going IPO just means spreading your risk, right? That means everybody who put money in now, that small group of people who put money in now, get to spread their risk. They get to get some of that money back. That's what that means. But the truth is, there are a lot of negatives to going IPO. Anyway, you know what we should do? That's right. We should go over the numbers. And I didn't have my logo up and nobody said anything. Just, come on. You guys are killing me. You guys are absolutely killing me. All right, let me get my notes out of the way. Yeah, look at these notes. Look at all that. And these are just the bullet points. And then I have the details down here. Just saying. There's a lot of stuff going on. Dow futures implied open 22 points down. S&P futures implied open 1.75 points down. NASDAQ futures implied open 0.5 points down. Unch. Oil down 0.07 unch. As we were at 60 and now we're at 66. We're pushing 70. US 10-year down 0.006. Here's a problem. Everything's unchanged. Why is that? Oh, you'll see. Nobody really reporting that I give any idea about, but this is why. This is why everything's unchanged. GDP, personal income, personal spending, PCE index, PCE year over year, core PCE. All of this information are the preferred numbers that the Fed uses to take of the economy. That's why. And then, of course, you have some Fed speak going on. I am definitely going to be paying attention to consumer sentiment. Just saying. There are things that paint pictures, and that's one of the brightest colors out there. Crypto Fear and Greed Index still at 7. DeFi Llama, we're at $95.382 billion in total value locked. Again, we're playing around under $100 billion. That's a problem. It's a massive problem. When you look at Bitcoin, remember we drew that line yesterday, and guess what? We hit it again, but then it went up. I'm just saying, hitting a low line, like if you look at this line going straight across here, right here, right? Hitting a low line and going back up, this is how you can make money in a bad market. So like if you bought here, or if you bought here, you made that mistake, you didn't get out, like maybe you bought there, you didn't get out here, that bounce has to be higher than where you were. It can come deeper, but that bounce has to be higher than where you bought. It's tougher to make money like that, but you can still make money like that. You can make money off of those tiny little bounces right there, right here, even right there. You can make money off of downward bounces. Depends on where you buy, when you buy. And if that bounce comes back to where you were, that's a dangerous game. A dangerous game. I know a lot of people that do it. It's a dangerous game. But look at that line. So what I'm hoping for is it does not come back down. And that, you know what I mean? Like following this line down, even with those bounces, would not be nice. Not at all. Let's take a look at the big board. All right. So let's see. Yeah, it's the same culprits. BTC, ETH, BCH, XRP at a $1.40. Sol under 85. Holy moly. XLM, LTC, Avalanche, SUI. SUI I would invest in. There's a big reason why I would invest in SUI. The reason why is because I think SUI can bounce back real fast. SUI, ton. Some of these smaller players can make big moves real fast. I'm looking at how I can X. I can make great percentages. BTC, BCH, ETH, BNB, XRP, I could probably X. Sol, I could probably X. XLM, I could probably X. XMR, I can X. SUI, I can X. LTC, ADA, I can X. Hype, I can X. There are a lot of places where you can X. Link, you can definitely X. SHIB, you can X. Doge, you can X. I'm looking at them and I'm saying, which one can I X? BTC, I can go up. I can X a little bit, maybe. But I'd have to be in the 130 range, to be 134 range, to actually be able to X off of BTC. Where ETH, yeah, I can X off of ETH. It'll be a tight X, but I can X. XRP, it'll be a tight X, but I can X because it's $2.80, right? What about Sol? Oh, their high was 200. Recent high, over 200. So can I X off of that? Yes. In a mediocre market, it was 200. That's why I look at that. That's one of the reasons why if you come over here and we look at, that's all the news for this morning. So if you missed it, you can go read the articles over there. Let's see. So if I look at the top 250, can I go by rank? There you go. Go by rank. It's a buyer's market at the moment, in my opinion. It's the buyer's market at the moment. Sort of. You know what I mean? Like, it's a buyer's market because everything's down, but a lot of people don't have that dry powder to go buying stuff. So it's a catch-22. Some of us have a couple of pennies to rub together so we can do stuff. So anyway, this is what I'm looking at. You see the GMB X factor? 0.87 off of Bitcoin's high. What did I just describe to you? Yeah, it would have to be at a new all-time high for me to X off of Bitcoin. $135,000. Ethereum, I can X off of that. See, 1.54. XRP, 1.59 GMB X factor. BNB, 1.25 GMB X factor. If I scroll down a little bit and I look at Solana, 2.51 GMB X factor. Doge, 6.42 GMB X factor. Bitcoin Cash, 5.83 GMB X factor. There's money to be made. The setup is there. Rick Ritchie made a really good point. It is a buyer's market if you were smart and you were paying attention to what we were saying, which is build up your dry powder, which you should keep separate from your emergency stash. Your emergency stash, you don't break that glass unless, you got big problems. People dying, people need to go to jail, and you need bail money, whatever. That's an emergency fund. You never touch it. But your dry powder, these are situations where you could be dipping in with some dry powder. Just saying, these are some situations. White Bitcoin, never heard of it. Never touched it. Never did any research on it. Don't ask me about it. But it's ranked number 12. Just saying. When I look at Cardano, it's got a 10.15 GMB X factor. So I can X off of that. The idea right now is for me to find ways that I can X my money, X my value. So everybody's talking about, oh, Bitcoin this and Bitcoin that and Bitcoin. If Bitcoin goes up, I'd like to have a little bit of Bitcoin. Why? Because if I have some Bitcoin, because Bitcoin's going to be used in a completely different way than everything else. So I do have some Bitcoin. But the idea is that if I want to actually increase my value, the bulk of my money, the bulk of my value is not in Bitcoin. That's why we created the GMB X factor, because that makes it easy for me to actually track what's going on, to track the potential. We have a Y factor that we use internally, and we're playing around with it. And we're going to see if we actually introduce that. But for right now, we've only introduced our GMB X factor. That Y factor, that one's interesting. Anyway, everybody, this is Eddie J on Crypto for GrowMyBag.tv. Hope you like what I'm doing. If you do me a favor, smash the likes, tell your friends about this community, because it's the only one that cares about your first investment, which is you. And you must invest if you think you're going to survive. So as always, thank you for your time. Thank you for your patience. And as always, thank you for your trust. I'll be back tonight for Friday Flips, basically an open floor, and we will have some fun. Friday Flips happens at 8 p.m. Eastern Standard Time. I'll see you later. Have a good one. Bye-bye.